but we're going to get started. So welcome to Hands-On. For those of you who don't know, I'm Alana. I'm the Operations and Events Manager at the Innovation Cluster. We are a not-for-profit organization that works with startups, specifically working in technology. With that being said, though, all of our events and workshops are open to the public. We are also part of the Team PTPO group, which includes some of the organizations you're seeing on your screen, as well as some of our partners. So again, thank you for joining us for this virtual hands-on business planning with the Royal Bank of Canada. So today we welcome Kayla Andrioli and Michael Warren. So some of the learning objectives today are going to be creating a business plan, sections of a business plan, and reviewing and revising the business plan. So earlier today, I did send out some documents for you guys to have up while we're going through the presentation. This will be recorded, so you can always flip back to the video if you want some more information, and Kayla and Michael are also welcome to answering questions. Also, there will be a Q&A at the end of the presentation. I'm going to enable the chat feature in your Zoom session so that you can populate it with all of your questions. And there will also be a survey sent out after the session so you can let us know what you liked, what you didn't like, and what we can do to improve. So I'm going to hand it over to Kayla to get started.
Perfect. Thank you so much, Alana, for the introduction. Michael and I are very excited with the opportunity to present and be able to connect with everyone digitally today. I hope everyone's doing really well and keeping healthy during this challenging time. So today we're going to cover how to create a business plan and why it's so important. At the end of the presentation, as Alana mentioned, we will have a question period. So please feel free to write down your questions in the chat box. Sorry about this. I'm just trying to get the slide up. There we go. So, perfect. Oh. Well, can you go back, Alana?
Yeah.
Sorry, we're working with some technical difficulties. I'm both myself, Michael, and I are on an iPad, so it's a little bit tricky shifting through the slides. The first slide is on the importance of a business plan. So there are many reasons for developing a business plan. Some of the benefits include helping you describe your business in a clear, succinct manner, using it to evaluate your progress in starting and running your business and reaching your business goals, evaluating possible new business opportunities that you didn't think of before or that weren't available at the time, and supporting loan requests, as they'll show your financial advisor how you'll be able to repay the loan. Probably the most importantly, is that studies show that entrepreneurs who start with a well-written business plan are more successful than those who don't. One of the things I found really interesting in this slide was evaluating opportunities you didn't think were possible. I think it's kind of timely right now with the COVID-19 developments that many businesses, even locally, are now making hand sanitizers and personal protective equipment, things that probably weren't in their business plan until the market has changed. So I thought this was really cool and timely to bring up. So we'll go to the next slide. So writing a business plan guides you to think through your business concept as you start, manage, and grow your business. It lets you fine-tune and consider better ways of doing things, and should be as strong as the dream you had for your business idea. Business owners will tell you a business plan is a living document. That is to say, once you start running your business, chances are you will have some ideas that go exactly according to plan. but you'll also have others that don't. So once you're up and running your business, you should refer back to your business plan and use it to help evaluate your progress and figure out exactly where you need to make some changes. It's really important to visit your business plan at least every year and adjust based on changing conditions. So there are 7 key components of writing a business plan, which include an introduction, a description of your team and your business, your marketing plan, a rundown of your day-to-day expenses, financial statements, an assessment of your business risk, and finally, your conclusion. We will cover each section one by one. You can go to the next slide, Alana. Sorry. Thank you. The introduction of your business sets the stage and the tone for the audience. The introduction should include a cover page, a table of contents, and an executive summary. As for the cover page, it should be attention grabbing, with maybe a powerful image that shows your business in action and your business logo. Your table of content should be well organized and not too long and easy to follow. The executive summary is really the most important part of your business plan. Since many investors read this first and may not even look at the rest of your plan. We'll go further into the executive summary on the next slide. So the executive summary is where you grab the attention of the reader by highlighting key information about your business. It should not exceed 1 page. Even though the executive summary leads off your business plan, it should be the last thing you write after you've completed all other parts of your business plan. This way you can select the most relevant information from your business plan and include it in your executive summary. So some of the key questions you'd want to cover is the industry sector, target market, how you differentiate yourself from your competitors, the structure of your business, is it an existing business or a startup, your experience, your team's experience, and your projected financial performance. So my next slide is going to show an example of an executive summary. You can go. Right, perfect. So this is the example of an executive summary. So I will read it to you. And if you just think about some of the questions I reviewed, this summary does provide all the information and answer all the questions. So Michael's Business Center is a startup business, providing clients with photocopying, fax transmittal, and reception services, and access to self-service computer workstations with a full array of software and internet capabilities. The Canadian retail business service industry currently generates $350 million in annual sales. Annual revenue for the Oakville market is estimated at $3 million. The major growth trends towards self-employment and home-based businesses has created a need to provide specialized support services. Most new businesses can simply not afford substantial investments in technology and equipment that can be accessed on as a needed basis through companies such as Michael's Business Services. In Canada, the number of new small businesses has grown at an unprecedented amount, with most of the growth concentrated in southwestern Ontario and Alberta. As a sole proprietor, I will bring over 20 years of both technical repair and sales experience from a large office equipment manufacturer. I have a Bachelor of Science degree from the University of Toronto, and my technical background will give me great skills to manage the operation of my photocopying equipment. My recent move into sales in the last 5 years has given me the skill for dealing with customers, creating my business plan, and most importantly, closing sales. Based on the size of the market and our defined trading area, our sales projection for the first year are $335,000. My salary will be $40,000. To date, I have completed market research and secured the lease at an exceptional location in one of in the core of Oakville's downtown shopping and business district. I have pre-negotiated equipment lease rates and received order commitments from over 24 businesses in the area. As a retail store with first-class location, the company will enjoy walk-in traffic, but will focus on newspaper advertising, direct mail, and direct selling to aggressively build our client base within the first year. So this was kind of an example of an executive summary. Really, it's a snapshot of your business plan. So if you want to go to the next slide. And Lina, can you go to the next slide?
After the team one? Oh, we lost her. Michael, did you want to pick up?
I can pick up, yeah.
Okay.
Good afternoon, everyone. My name is Mike Warren. I'm just going to carry on where Kayla left off. So next up is the team. A business is only as strong as the people who breathe life into it, and that includes you. In this section, you talk about your skills, your strengths, as well as all those other people on your team. If you have a team, you clarify how they're going to help your business. If you have a board of advisors, list their credentials. Professional services, partners, lawyers, accountants, bankers, consultants. You want to list everybody that is helping you with their plan. You also have to look at the human resources side section where you can address labor, compensation, and training of employees. Okay. If you want to switch to the next slide, Alana.
Sure. I think Kayla's back if we want to.
I think she probably is. She sent me an internal message that I told her that she dropped off. There she is.
Sorry about that. Technology is lovely, isn't it?
I just did the team section, Kayla, so I did your slide number 8. I'll just continue on.
Okay, thanks, Mike.
Okay. So the next thing is business environment. You need to define that business environment, okay? In this section, you'll need to outline all the work you have done so far to start your business. Or if it's already operating, detail how long and your sales figures. Alana, you still got the camera showing on Kayla. If you can switch it over to me, might be helpful. Oh, there we are. Now you get to see me. Sorry. Continuing on the business environment. Describe industry trends along with the growth prospects in the industry. Why are you going to succeed in your business? It's always beneficial to include any research and statistics that you have been able to dig up. Provide a description of the product or service you'll be selling. What makes it unique? Where will the focus your sales efforts be? What is your target market? And how are you going to carve out a position for yourself within an existing industry? All of that information will help you build the case and contribute to why you believe your business will succeed. You can go to the next slide, Alana. Some of you may have seen this before. The acronym for it is a SWOT analysis. And what a SWOT analysis stands for, it stands for strengths, weaknesses, opportunities, and threats. You should do one on your business. And I would recommend that you be as honest as possible because this document is for your use. I would also recommend that you do this SWOT analysis before you even start your business plan, because this SWOT analysis is kind of a snapshot again of strengths, weaknesses, opportunities, and threats. And based on how you answer these questions on the SWOT analysis is going to actually dictate how you're going to do the business plan. It'll also give you a very good idea whether your business is viable or not. You can also do a SWOT analysis on you personally, because essentially it's your business plan, but in a lot of instances, whether it's a financial institution that you're going to apply for lending, or whether it's you're trying to pitch your idea to a partner, yes, there's the business, but they're also looking at you personally. So doing a SWOT analysis on yourself is not a bad idea. You can include a SWOT analysis in the business plan or not. That's strictly your call. I find that SWOT analysis are best for your own use, and then what answers you get from that SWOT analysis, build that into your business plan. Okay. Can we go to the next slide, Alana? Marketing plan. Your marketing plan should include everything you're going to do to get your customers. First of all, who are your customers? Is it everyone in your neighborhood? Is it working moms? Is it friends and family? What is it? So you really have to describe that. Describe who they are. Provide an estimate of the total size of your target market in the geographical area you're focusing on. What makes your service or product unique? Sell its features, benefits. Explain why people are going to want it and how they're going to use it. The goal of every business plan and every entrepreneur is to make money. So of course, you're going to plan on making money. But how much should you charge for this product? What's the price point? You need to factor in how much it costs to make the product, deliver the services, you calculate your expenses, and look how much your competitors are charging. There's no point in you charging $100 for a product when your competitors are charging $25. So it has to make sense. You have to describe how and where you plan on selling your product and service. How are you getting it out to your customers? And that's even more important given the COVID virus, because there's no face-to-face meetings. So how are you going to get it across? If you're trying to start a business up in this environment, how are you going to get the word out? Are you going to use social media? Are you going to use Zoom presentations? Are you going to talk on the phone? Need to know that. You also need to factor in how much it's going to cost to get that out to your potential clients. Describe how and where you plan on selling your product. Investors will want to know all of this. They'll want to know, okay, who's your target market and how are you going to get to them, whether they're individuals or whether they're companies. If you're going to sell from a website, explain the payment and shipping details. In your marketing plan, you also want to talk about how your business is going to advertise. How much of a budget are you looking to allocate for advertising and marketing? And where are you going to advertise? You want to provide an overview of the competition, how they go to market, and how your business will compete to win business. You want to research the methods of advertising. You want to use and make calls finding out how much it actually costs. Sometimes we think it's going to cost less than it actually does. If you don't have the expertise to design a website or an ad, hire someone who does. You want to project a professional image to your customers. Those are all the key points to cover a marketing plan. Operations. In the operations section, you'll need to provide the stage of development your business is currently in. Is it just, a thought in your head? Is it in your imagination? Or is your product already being manufactured or delivered? You need to outline a step-by-step process of manufacturing or procuring your product or delivering your service. Explain quality control measures you have in place. This part of your business plan should also show that you have a complete understanding of the entire process involved. That's right from start to finish. A lot of questions need to be answered in this section, such as which suppliers will you be using? Have you negotiated costs? How long does it take to produce or deliver? When will you start producing? All of those are good questions. Whoever reads this business plan needs to understand that you've kind of gone through this process, especially in the operations side. Okay, next slide, please. Oh, thank you. Finance. This is the one that both Kayla and I as business lenders spend a lot of time on. There are three main components to this: cash flow statement, income statement, and balance sheet. And I'll touch very briefly on all of these. So from a cash flow statement, your business has two types of expenses. One is one-time expenses, and other is operating expenses. One-time expenses are incurred only when you're setting up the business. So it could be developing a website. It could be manufacturing a prototype of your product. It could be, it's really any one-time expenses that are not going to recur on a regular basis. So startup costs, basically. And then you have to differentiate that from operating expenses, which are ongoing costs that you'll pay every month. Calculating these expenses before you start your business is very important, because when you plug them into your cash flow statement, they're going to reveal how much startup financing you actually need to get your business up and running. A cash flow statement is a reflection of how much money your business has at a particular point in time. It lets you see the fluctuations in cash flow and should be prepared on a monthly or quarterly basis to help you deal with cash flow problems. Realistically, if you haven't started your business yet, you're really only providing expenses and a cash flow statement. Cash flow is probably the most hardest thing to get a handle on. It is the most challenging, but it's also the most important thing to do. So highly recommend you spend a lot of time on this, because you can go through all of the marketing plan, the operations, the executive summary, but if the cash flow statement comes up that you're going to lose money every single month, you might have to rethink your actual business plan. So we go from cash flow statement to what's called an income statement. An income statement shows the profit and loss in a particular time. It details all the revenues, expenses, and other costs. It can be done monthly or quarterly, and it's pretty much an accounting tool used to measure the business performance. So the easiest way to look at an income statement is you have your top line, which is your sales. Then you have what's called cost of goods sold, which is how much does it cost you to generate those sales. So whether it's a product, you might sell a product for $100 and it costs you $20 to make that product. That's in the cost of goods sold. Then you have what's called operating expenses, which are things like rent, utilities, salaries, any overhead expenses. So that's your expenses. And then so you take your revenues, your cost of goods sold, you get your gross profit, and then you take your operating expenses from that, and then that is your net profit. So that's basically your income statement in a nutshell. Balance sheet is the other kind of financial performance, financial information sheet. A balance sheet is a snapshot of the financial state of the business in a particular point in time. It outlines the assets, liabilities, and equity, and helps you know the net worth of the business. So your business might have assets, they may have accounts receivable, they may have some equipment. That's an asset. That's what the company owns. Then you look at the liability side, which is what the company owes. There could be payables. There could be a loan that you have on there. Anything where the company owes money. Things like HST is in there, or taxes payable are in there as well. And then the difference between your assets and your liabilities is your net worth of the business. So whether you're doing your accounting yourself or you're getting somebody else to do it for you, it is important to stay on top of completing these statements on a regular basis. Okay. Next slide, please, Alana. Risks and conclusions. Every business has a degree of risk. So take the time to think through all of the possible risks your business could face. Be honest. Take them seriously, because thinking ahead can prevent problems from happening. For example, the economy always has a risky effect on the business. Well, we're seeing that right now with this COVID virus. The world has changed. And it's not just the world, it's Lindsay, Peterborough, Durham region, City of Kawartha Lakes, all of it has changed. So you have to take a look at what the impact of this COVID virus is going to have on your business, because it's going to be around for a little while longer. Competitors are another risk. What competition is out there? How do you differentiate you and your business from all the competitors? If you have a key member, what happens if something happens to that key member? Things can change. Not having enough money for advertising could impact your business. There are always risks in a business. But what you have to kind of lay out in this section is, how are you going to minimize or address those risks? Remember, the most important reason for writing a business plan is it helps you plan before you open or start your business, and then manage your business. So you need to, don't think that, well, I don't think this is a real risk, so I'm not going to put it in there. You really have to take a real hard look at your business and outline all the risks, and then outline, okay, how am I going to mitigate or address those risks? In the conclusion section, you kind of want to you want to go back to the very start of when Kayla mentioned your executive summary. You want to restate your goals and objectives. So you want all of this business plan, all the slides that I've talked about, and Kayla, you want it to go back to the beginning of what your executive summary is. The other thing you have to look at on a business plan is, what's the purpose of your business plan? If your purpose of the business plan is to get financing, you have to clearly state the amount required and what it will be used for. There's no point in doing a business plan, and if you're looking for financing and your conclusion just says, I want to open up this business and start operating. Well, as a lender, both Kayla and I will look at it and say, okay, it's a nice business plan, but how much money do you need? So outline it right in this conclusion. Your conclusion section needs to be concise, clear, and leave a positive impression. Next slide, please. Oh, you got it, sorry. Review and revise. As Kayla mentioned earlier, The business plan's a living document. And what we mean by that is you should be looking at this thing on a regular basis. To give you an example, if you had done a business plan last year, or say even 6-8 months ago, and with all this COVID virus going on, you'll have to revise your business plan because the world has changed. The market has changed. People's buying habits have changed. So you have to change your business plan to address that. Once you finish the business plan, don't forget about it. Work on it regularly. It's a living document. Okay. That's my portion of it and Kayla's. We're open to any questions you have. If your questions are a little bit more detailed and more specific to your particular business, I don't mind if you reach out directly to me. My email address is there. Both Kayla and I have reviewed numerous business plans over the years, and we might be able to help you on it. So I guess I'll open the floor up to any questions that people have.
So now that we're ready for questions, you guys can put anything you have into the chat box, which is in your Zoom. As people are populating their questions, I'll quickly remind everyone that on Tuesday, we're doing another human resources workshop at 12 o'clock with Savino HRP. This will be more of an update in regards to all the HR that's been changing so much. I think now that everyone's kind of gotten a handle on what's going on, Matthew's just going to run through everything. And then also next Thursday at 12 p.m., Rose, our marketing manager, is going to be doing a digital marketing and selling during COVID-19 workshop. All right, so the first question is, since you've reviewed multiple business plans, in your opinion, what is the main thing that makes a good business plan stand out?
Okay, I can take that if you want, Kayla. What stands out is clear and concise. So, and address all the points that we've gone through in our business plan presentation, but the main thing is clear and concise. And you need to remember who you're writing the business plan for. So if the business plan is for your own use and really get a true understanding of your plan, that's great. But you might want to customize it if you're doing a business plan for presentation to your financial institution or whoever your lender is. And you may want to focus a little bit more. If you're presenting it to, say, RBC and Kayla and I, we'll go through all of those sections that we've outlined, but we're going to put focus on the cash flow and the income statement. Because when you cut through and you take away our titles and what we do, essentially as bankers, as lenders, our job is what's called risk analysis. So to put it very simply, the bank lends the money out, they expect the money to be repaid, and that's the risk. So we have to assess that risk. And we'll go through your whole business plan and look at it, but we'll spend a lot of time on the income statement. And we'll look at, because in a lot of instances where you're starting new businesses, your income statement or your gross revenue is a projection. That's your best guess what you're going to do in sales. Our job as lenders to evaluate that is, does your projection make sense? If you say you're going to go to market with a new business and you're going to do $500,000 in revenue in the first year, well, as a lender, I'm going to say, how are you going to get to 500,000? Is that realistic? So customize your business plan to who you're going to present it to, and make sure you understand everything in that business plan. Essentially, you're presenting the business plan, your business, but you're also presenting you as an individual and as a business owner. Because yes, as a banker, I'm going to lend to the business, but I'm also lending to you personally. Okay. So clear, concise, and know who you're presenting the business plan to. I hope that answers your question.
Mike, I'd also add in also talking about calling out your risks. So what are the risks? And how do you minimize those risks? Because from a lending perspective, we look to do this as well. So if you know what your risks are, but you also have a great handle on how you minimize these risks from happening, this essentially makes the lending process much smoother as well. So I would say that would be a big portion.
Yep.
Follow up to that, how often should somebody be updating their business plan?
So I can take that. I mean, in today's situation, with the change of marketplace, it wouldn't be a bad idea to revisit it. They recommend at least annually. Some people might do that more often than others, but I would say at least annually would be my recommendation.
Okay. So the next question is, what percentage of the gross sales is usually loaned out as a credit line, or do you base the percentage on net?
I can take that, Kayla.
Okay.
A general rule that we go by is, actually, let me back up even further. So there's two types of lending. One is a line of credit, and one is a term loan. So a line of credit finances your day-to-day expenses, and it needs to fluctuate. So if you look at it, you have a product. It costs you money to build that product or manufacture it. Then you go to market and you sell that product. So as you're building the product, you may use your money, your working capital, or your line of credit. And then when you sell the product, the proceeds from that sale are going to be used to pay down the line of credit. So the line of credit should fluctuate, and it's used for day-to-day expenses. A term loan, which is the other type of lending, is to buy fixed assets, buy equipment, purchase a building, leasehold expenses. So it's tangible. And a term loan, you repay over a period of time. So if you're buying a piece of equipment and the useful life of that piece of equipment is 5 years, well, the bank might look at it financing that term loan over 5 years. A general rule that we use internally is lines of credit should be not much more than 10% of your gross revenues. So if you're doing $100,000, or if you're projecting $100,000 in gross revenues a year, you're looking at a $10,000 line of credit. But
that's a rule of thumb.
Yeah.
So I would say, and certainly every business sector or business industry is different. So if you've got a lot of accounts receivables, there's certain factors that weigh into having an operating line limit. So it's not just the end all and be all of 10% of sales. So we do look at the nature of your business and kind of customize a plan tailored to your business.
Okay. The next question is, for large businesses, how big should a business plan be? One can get carried away with charts and graphs, etc. Can it be too overwhelming for lenders?
Yeah.
It can be. It's going back to Kayla's point about your executive summary. That's where you want to catch somebody's attention. If your business plan is 30, 40 pages long, that might be on the large side, but you look at it realistically, am I going to read 30 pages? To be brutally honest, no, I'm not. I'm going to go to your executive summary, and if that catches my attention, then I'm going to start to look at the rest of the business plan, including the financial stuff. So you want to be as concise as possible. There is nothing wrong with putting an addendum to your business plan, which are charts, graphs, research questionnaires you've done. So you can take all of that stuff and you can put it as an appendice to the business plan. And therefore that one reduces the size of your business plan. And if you say, okay, I did this market survey, I surveyed 30 potential clients and here's their answers. Well, you could put that in the appendix and then refer to it in the business plan saying, I've done this market analysis and here is a recap of it. Okay. Did you have anything to add to that, Kayla?
No, I think
Okay.
that's good. Yeah.
All right, so that is the last question right now. As Kayla and Michael mentioned, if anyone has any more direct or substantial questions, that you can reach them by email, which is on your screen right now. Do you guys have anything else that you want to let anyone know about, or?
Just I guess, a word of advice to the entrepreneurs out there and people who want to get into the business market. If you do your business plan up and you present it to a lender, wherever you deal, and they say no, that shouldn't stop you. Because they may not have understood your business. They may have had a bad day and they just don't want to look at another business plan. It's your business. There is nothing wrong if you get declined somewhere. Approach another financial institution, or there is alternative lenders out there that you may have your bank accounts opened up with RBC, whatever financial institution, but there are other lenders out there that do financing as well. So just because you get declined once doesn't mean that you have a bad business plan. You might have to fine tune it a little bit, but if you present it to a lender like Kayla and myself, and for whatever reason you get declined, ask why, or what could you do differently, or what's missing in my business plan. Ask their advice, pick their brain, and then revise your business plan or revise your approach, how you're going to present it next time, and you'll be better off for it, and you'll be prepared for some of those questions.
Kayla, do you have anything to follow up with?
No, I think that's great, Mike, and great advice. Obviously, working with a team for your business plan. So if you have an accountant or other resources, to make sure you have a solid business plan, but always ask for advice.
Okay, so again, we do have 2 workshops coming up next week. Thanks everybody who joined us today. You can catch up on everything on our social media if you do want to follow us on Twitter or Facebook or Instagram. You'll get way more information. We'll also be emailing you a link to the survey for the session today. And this is recorded, so we will be sending you a link to the recording as well. So thanks again, everybody, for joining us. And thank you, Michael and Kayla.
Thank you for having us.
Thank you and good luck.